So for goodwill, I'll use, I think this is brief exercise 12.5. Okay, and this is where Winans Company has acquired Omount Enterprises for $700,000. And at the time of the purchase, this is the balance sheet of the company that was purchased, Omount, and they've got the assets, the liabilities, the owner's equity. And the estimated fair value of the assets is $800,000, not the $620,000. So the first step, there's basically a three-step process for recording goodwill. So let's go through that. First step is you adjust the assets of the company to their current fair value. So in this case, they just give that to you. That's fine. In some of the problems, they will list out all of the various assets and liabilities. They will give you the current fair values. You have to make those adjustments to come up with the fair value as opposed to the book value. Why would you do that? If you think about, say you were buying a business on Newbury Street in Boston, and that business had been there for 20 or 30 years. Well, on the books, the value of their building is going to be rather low compared to the value of its, its fair value today. So the value of their building might be on the books for $500,000 when now it's worth $2.3 million. And so when you, that's why all of the assets and the liabilities are adjusted to their current fair value, because that's what the company, the purchasing company is buying now. It doesn't relate to the book value. Okay, so we adjust all of the assets and liabilities to fair value. That's the first step. Then you go through this. You compute the amount of goodwill. And the very easy way to do that is to just say, okay, so what did Winans pay to buy the company? And they give you that, the $700,000. What did Winans get? Or what Winans got? So they got the fair value of the assets. They still have to pay the bills that came with the company. So the fair value of the net assets is $600,000. Paid 7, got 6, 100,000 must be goodwill. Okay? And then the third step is you do the journal entry. And so in some of the problems, you'll be listing out specific assets, which is what would really happen, and specific liabilities. There might be accounts payable, notes payable. But here, this is a brief exercise, so they keep it simple. Assets come on at the $800 fair value. The liabilities come on at the $200,000 that still has to be paid. Cash we know is $700, and then goodwill comes on as an indefinite life intangible asset of $100,000. Okay, so that's your basic three-step process of accounting for goodwill.